Just a minute.
Good morning, everyone.
Good day and welcome to Purple United Sales Limited earnings call. We appreciate your participation as we review the company's operational and financial performance for H1 FY26 and outline our strategic direction. The purpose of today's call is to provide an overview of the company's progress and address questions from our investors and stakeholders. Please note that certain statements made during this call may be forward-looking and are based on current assumptions. These involve risks and uncertainties, and actual results may differ. The company assumes no obligation to update these statements except as required by law. We encourage participants to consider these factors and avoid placing undue reliance on forward-looking information. Representing Purple United, today we have with us Mr. J.D. Seth, the Managing Director, and Mr. Naresh Kumar, Chief Financial Officer. I would now like to hand over the call to Mr. J.D. Seth for his opening remarks and present us a brief presentation. Following his address, we will proceed to the Q&A session. Thank you and over to you, sir.
Good morning, everyone, and thanks for the introduction. I'll start this presentation with a small EB update that we have uploaded on the exchange also, so that we give you a fair idea how we are faring in the retail expansion of the EBO space. So as we speak of 30th November 2025, and we have expanded our presence in Maharashtra, Guwahati, Jharkhand, Chhattisgarh, and Kolkata. Recently, we opened 2 stores in Mumbai, one at Inorbit Vashi and second at Vashi. So we are focusing on our cluster approach, that whichever city or state we are approaching, we are having a multiple EBOs for a better customer connect. So this is the Inorbit store, which is visible on your screen, and this is the Vashi store. Few more stores also will be coming in Mumbai. And as I mentioned in my last AGM speech also, we are coming in Pune and Bangalore also as a part of our expansion plan. So these are the stores that we opened in November 2025, Walking Square, Amritsar. We expanded our presence in Lucknow also by opening a store in Lulu Mall, Lucknow. We opened at BRC City Mall, Patiala also. And one factory outlet at Muktsar, Punjab. One more store at Nawashahar, Punjab. I have been keep on telling in my previous discussion that Punjab is really observing a interesting retail boom. So opening more stores in Punjab is aligned with the expanding market in Punjab itself. Internal images of our store. So as we speak, we have 86 EBOs operating in different states and cities. This is the breakup. And where you see the numbers are between 1 to 3, we are expanding in those cities or states also. If we talk of the mix, 25% stores are in malls and 75% in the high street. That is the current store mix that we are operating. So in November, approximately, we have added 10,000 square feet as our retail space by opening 7 more stores. This is the region-wise split. In East, currently we are operating 11 stores. West, we are operating 17. North, we have 57 stores. South, we currently have only 1 store. But as I said, some of the stores and the projects in cities like Bangalore, and we're in the process of expanding in other cities also as a part of our following our cluster approach. So this is the state-wise breakup. This presentation is available on NSE, so anyone wants to have a detailed understanding can download it from the NSE. So as we speak, we have around 128,000 square feet super area that we are currently operating in across India. And we are hopeful that we'll be able to have align a very decent growth in acquiring more per square feet area across India. So this was of the this update is about the retail expansion. Now I'll take you to the main presentation. So just to I'm assuming some of you who have joined the call are most of them are aware of the company, but there might be few persons who are not fully aware of the company background. So for their convenience, let me help them in understanding our business model and that other one second. So Purple was founded in 2014, and currently we are based out of Delhi NCR. And initially we started the kids business with distribution and e-commerce, and slowly, and then we entered into our own retail also. And as the retail is maturing, the focus is towards the control business, that is our retail business, plus our D2C business, that is our own website. So we're in the premium kids fashion in the age targeting age group of 0 to 14. Fun, fashion, and functionality are our mantra, and to achieve this, we ensure that all our products are lab tested, of high quality and trendy and fashionable as per the contemporary trends prevailing in the market. Shop happiness is the mantra that we try to promote through our brand. If we talk of the vision, we want to be the most admired premium fashion brand in kids fashion, and mission is to enable children to express themselves using our brand as a medium. Now, our motto is very clear. We want to redefine kids wear as a kids fashion industry. So we are all of us are working towards that motto to how to redefine kids wear as a kids fashion. As I mentioned, we have 86 EBOs operating in our country. Few plus a decent number are in the public stage. So we are hopeful that in the short term, we'll be touching 100+ mark, and we will be reaching more than 50+ cities. We'll be increasing our reach in more cities. Retail area I explained just now. We have a 30,000 square feet mother warehouse that caters to our need of all our business channels. 650+ size. We have a return customer rate of 27%. In various channels, we have around 25+ partners. Those are increasing. And 500+ is the current employee strength, and we are operating in 17 states so far, as far as our EBOs are concerned. To strengthen our portfolio, we are introducing sub-brands. Most of you who are aware of our journey, we initially started with Toothless by Purple United in the footwear category. And to strengthen our footwear portfolio, we introduced two more sub-brands, Striders and Bolsey, in the footwear category to identify and align these brands with the subcategories in the footwear space. Striders is into the open footwear, the clogs is a category. Bolsey is into the sports shoe. And in our understanding, we see a bigger market gap in the footwear as a segment because very few organized players in the kids footwear segments are operating in our country. And we are hopeful that we'll be able to increase the contribution of footwear in our retail space, which is currently, I think, 18% approximately. And with the same space, we can definitely increase the contribution and per square feet sale contribution from our footwear wall that we have given in our EBO space. To strengthen other categories also, we have introduced this one, THS, that's the style, it is into the party wear segment. And to give a differentiation or a premiumness to that particular subcategory. And all these brands come under the umbrella of Purple United Kids. The ecosystem, this slides generally talk about the overall ecosystem that currently we are operating. And since we are in the premium phase, so we ensure that, as I mentioned earlier, all our products are lab tools that achieve premium quality of the latest and contemporary trend, gentle on skin, and we are using biodegradable pack. We are operating whatever comes under the kids fashion as fashion, that is, which is apparel, accessories, toys and hard goods and footwear. I've briefly mentioned about the branch that currently we are operating. We are in the omni-channel space. Besides our own retail, we have our own website. A few of you are aware that we have recently updated our domain from .in to .com, and we have launched a new website. Please have a look. And the website is in a new platform that we are currently operating. And currently in the pilot stage, maybe you will find some technical issues. But yes, the website is up and running, and now the domain is purplegenetic.com. Besides that, we are selling through marketplaces also, and through our offline channels, that is distribution, SIS, and large format stores. So this slide again focuses more on the channel that we are operating. Retail we have discussed. We have EBO presence in 86 stores across India. Online website is purplegenetic.com. We have e-com channel partners and the offline distribution channels. Offline channel distribution, SIS, and large format stores. To talk of the marketing initiative that's currently keep on doing. We do certain on-ground activation by connecting with schools, regional schools in various cities where we are operating, participating in the kids events, our digital presence through various social media options, and we keep on interacting with the macro and micro influencer in whenever we launch new stores. This helps us in generating a decent following and connecting with our regional customer in that particular city. If we talk of the categories, as you mentioned, we are to 0 to 14, whether it's infant, boys or girls, and all the categories that we mentioned earlier, that apparel, footwear, toys and accessories, we are doing for all these age brackets. And we are in the asset-light model. We do not have a factory. We have the entire designing product development and sourcing team members who come from various institutes like NIFTY and FPDI. We design, we get it sourced from various factory. We do the inline QC and the post-production QC to get the products over warehouses. And so this is the concept we are following. And we have factories in Delhi and NCR. Some factories in Ludhiana, Agra, Tripur, or some other cities, based on the subcategory and the particular category we are operating. Working with multiple factories also helps in getting the innovation and updating our product development also. Again, this slide depicts about various cities where we are operating our 86 stores. As I mentioned earlier, 75% in the mall and also in the high street and 25% in the mall. And more or less, we foresee that this will be the trend even going forward, because very few premium and new malls are coming. So this ratio will be maintained as we are envisaging for future. So this slide basically mentions about what are the growth prospects for Purple as a company. And as we have seen, that market is shifting from the unorganized segment to the organized segment, because there are a lot of fragmented competitors operating the market, and particularly also because of the increased disposable income, nuclear families, and alignment of our target audience towards the more fashion sense. We see a lot of opportunity in this space. Plus, if you talk of our competitors, not our exactly competitors, the players who are larger players who are operating in the same segment, they are stores in 4-digit numbers, and we will be touching 3-digit numbers. So there is a huge gap, particularly in Tier 1 and Tier 2 cities, and all the cities are expanding. If we talk of Mumbai, it is becoming Navi Mumbai, Delhi NCR expanding to Noida, Greater Noida, even Gurgaon and Manesar. Chandigarh is expanding to Mohali, etc. So all the cities are expanding. So in these new age colonies, you see the young population, high-rise buildings, structured malls and structured high street, and they have decent disposable income. They are our target audience. We will be expanding in these spaces also. Going by my learning, although our focus will remain on the control business, that is our own retail, and D2C, that is our website. But all channels are important because in the other channels also, you are able to interact, you are able to acquire their customer indirectly when you operate to other offline distribution or key account channel. And lead generation may happen at any channel, but ultimately there might be your future customer, and we operate in those channels also, so that we are able to acquire those customers directly. And that is the approach we are following. And since we're in the kids fashion, as I mentioned, we are defining kids wear as kids fashion, and what we are seeing that this awareness is really helping us in creating a niche for ourselves. This slide speaks about the market size of the kids apparel industry. It is approximately 29.34, and it's going into CAGR of 3% in the next 4 to 5 years. These figures are in USD billion. As per this study, the largest market is North, and online segment is also fastest growing. And it makes sense also because retail takes some time to expand, and that's why our strategy is very clear that we'll be focusing on control business, that is our own retail and D2C. So, as I have already explained, that growth in the premium kids wear is fueled by highly disposable income, urbanization, more dual income, brand conscious parents. So again, the parents are shifting from the unorganized segment to the organized segment for comfort and quality, and towards for design and safety. And social media and influencers are also playing their part in driving the demand for the kids fashion in this segment. So those of who are not aware of our background, prior to my this entrepreneur journey as an entrepreneur, I was associated with all the big names like Nike, Puma, Bata, Reebok, Adidas, Puppies, etc. We were their channel partners in various capacities, whether it is distribution, retail, or in some cases e-commerce also. We were the initial channel partner who launched brands like Puma and Nike in our region when they came to our country. So that is the experience that I have gained over so many years. And kids fashion, entering into kids fashion was after identifying when we saw a gap in the kids fashion industry. That's how we started our journey into kids fashion. Initially, we started in footwear and then added apparel also. Mrs. Seth, she's my spouse also. She's also having a fashion background, was earlier running a fashion institute. We are capitalizing her earlier experience in our designing, sourcing, and product and other retail operations aspects. So we have other team members also. I think just to not focusing on that, all the departments, divisions are headed by people who are well versed, well experienced, have worked, having a 10 to 15 years of experience in their specific category, and they are our key persons in our business, and they are also helping us, supporting us to taking our business to the next level. So if we talk of some numbers, channel-wise contribution, if we talk of, if you can see in the FY25, the retail contribution was 21%, distribution was 71%, and 5% was key account, 3% was online. And now, if we talk of H126, Retail is 40%, key account is 19%, distribution is 36%, and online is 5%. Going forward, what we are foreseeing, the retail contribution will be around 50%, and all other channels will grow organically. As a part of the strategy of the company, we are focusing, as I mentioned, more on retail and D2C. So these two channels, whether it's B2C or D2C, will contribute significantly in the future periods. And if we talk of the product mix, 62% is apparel and 37% is footwear and 1% in hard goods. And more or less, the contribution, product mix contribution is the same for this H126 also. This is the GMV per store per month growth that we have seen over the years. And Naresh, can you throw some more light on this slide?
Sure, sir. Good morning, everyone. This is our same store growth performance for the 2 quarters of last financial year for this financial year. A store having a vintage of 3 months, number of stores are 24, and the contribution from each store on an average in the first quarter of this financial year was 20,000 per store per month, and that particular store generated 4.21 on an average for the second quarter. And as you can see, the stores having vintage of 6 months were having 4.11 lakh on an average per month GMV, subsequently which had around 7.09 GMV per month, and so on. The thing is, which we can see from the matured stores, we are earning around 11 lakh or plus per store per month GMV per month. So this is how our stores are growing.
So I just wanted to add, in retail business, new customers and repeat customers are the two key factors that drive the sales besides retail operations. So these are the fact that not only we are able to generate new customers, and we are able to get a decent repeat customer rate of 26-27%. So, and as the store is maturing, and we are able to make the store more profitable, more viable. So these are the H1 number. Revenue from operation is 60.72 CR, and with the EBITDA of I think actually with EBITDA of 12.88 and PAT of 5.05%. In percentage term, in EBITDA margin is 21% approximately, and PAT margin is 8.32. And over the last year, we have done H1 versus H1 is a top line growth of 91%, and that we have achieved. So these are the financial numbers. Revenue of operation have increased 99%. EBITDA has seen a jump of 81%. PAT has seen a jump of 53%. Reserve has seen a jump of 9.92%. And total assets have jumped by 23%. So these are some of the, you can say, reviews, etc., that we have captured from the social media. And it speaks about how we are performing in the industry, and thanks to these customers for giving us this kind of motivation and inspiration. So if we talk of the shareholding pattern, promoters' contribution is around 63.82%. That's 36% is with the public. And this data is that we have done a 52-week of high of 588 and 52-week of low of 120, current price of 482, and market cap of roughly 463. So I would like to add one thing. Around 1 month, approximately 1 month back, We have shifted our corporate office in Noida itself because team size was expanding and we were earlier occupying 4 different offices. Now we have consolidated our office at one place and we have shifted to a new place in Noida itself. It's a bigger space for better synergies among the various teams that participate in our day-to-day activity. Thank you very much. Thanks for your patience. Now over to you all for your questions and queries. Thank you very much.
Thank you, sir, for the introduction. We will now begin the question and answer session. Participants who wish to ask a question are requested to raise their hand. To ensure we accommodate as many questions as possible, we request each participant to limit themselves to 2 questions at a time before rejoining the queue if needed. We'll take the first question from Mr. Sumit Chopra.
Hello.
Yeah, good morning, Mr. Chopra.
Yeah, good morning, sir. Congratulations, sir, for the good set of numbers. Sir, I have a question that continues from the previous earning call. So in last earning call, you said that you are targeting 18 to 20% of the revenue share through e-commerce or online platform. However, our H1 shows only 5% revenue contribution has come from this channel.
Sure.
So, sir, can you throw some light what is not working for us specifically in this channel? And sir, specifically, what efforts we have put in, if you can highlight some qualitative or quantitative efforts that we have put in last 6 months to shore up this particular channel, and what are our future plans to raise the sale in this from this particular online channels?
Sure. So, yes, you are very right. This was a discussion earlier. Now, what is happening, as I mentioned earlier, one second, I would like to take you to the So, as I mentioned earlier, we were in the process of revamping our own e-commerce operations, and we obtained new domain by the name of purpleunited.com. So, website was in the development stage, and So, that's why the numbers were not there, and I would like to present the website. One second. Sorry, I was not able to. Naresh, can you present the website, please? Some technical issue at my end.
Sure, sir.
So, Mr. Chopra, so we were in the process of revamping our e-com business. Earlier, what we were doing, we were using e-commerce as a liquidation channel. Okay. And we were updating our website also. Now, strategically, what are the changes that we have done? That we are aligning our strategy. And you can see our new website if you are able to see. And it's a very contemporary look that we have given to our website. And it has been launched around 15-20 days ago. 4-5 months happened for developing this website, taking it to this level. So D2C numbers or the e-commerce numbers were not there, and we are very hopeful. That we'll be able to generate at least 400 to 500 orders per day through our website, and we have started promoting it organically and through some SEO activities, and we are seeing the response. And for the marketplace, we have realigned our strategy. Earlier, as I mentioned, we were using the marketplace as our liquidation channel. Now, what we are doing, we are making NOS type, never out of stock type, so that the algorithm works in their favor. Whenever we launch these type, we do some organic activities, some marketing activities, and we see the response. If we are able to get a DRR for, let's say, 8 to 10 pieces per day or 7 to 8 pieces per day, then we add new colors in that. So, Nalish, second वाले इसको click करना है कोई product. No, white वाला, second clocks. हाँ, just click there. So, just see how we have done. एक बार इसकी images भी बाकी scroll करना. No. Keep on scrolling. So, these kind of initiatives with them, we have really putting the energy in our D2C aspect, and I am sure that just see this slide also how we are putting the features, etc. So we are doing all this activity, and these are taking some time. We were hopeful to increase them, and NOS building the algorithm, building the never out of stock category, taking some time. We are very hopeful that this thing that will be easily able to take the numbers that we have committed earlier.
Yeah. Thanks for showing this, sir. Sir, actually, I have already gone through your website, and I must tell you that it is really improved in comparison to the last time what I saw it.
Mm-hmm.
So, sir, in your own website, I can see a lot of variety, but as a customer feedback, I would like to specifically give you feedback for your marketplace. So when I go to the marketplaces like Amazon, Flipkart, and when I try to search for this purple brand, so on these marketplaces I still see very less variety of the apparel.
Okay.
And
so actually, what is happening?
For footwear I can find something, but for apparel I see very less variety.
Yeah. Again, the reason is we are developing NOS styles. And if you go to Mantra, if you see the most popular site, you can see around 7-8 styles that we are able to develop, because algorithm of these e-commerce players work in such a manner. And having said that, being in the premium fashion space, so our focus is always on fashion portals like Mantra. Amazon and Flipkart are more of a becomes a liquidation channel. So again, the positioning we are doing that we have to focus give more focus on the fashion portals. So that is our strategy. That I'm not saying that we'll ignore Amazon or Flipkart, but yes, slowly we are building all these channels, because now what we have done, now we have around, if I talk of our head office, we have 15 members team who are operating in the e-commerce right from the head e-commerce, and recently a new person has been onboarding. She'll be taking care of planning and strategy, and having decent years of experience working in the e-commerce way. And now we have different key persons. You can say the POCs for each channel with KRS line for different KRS for Amazon, Flipkart, for Sky or Mantra, etc. So slowly, it is taking time, but you'll see the results going forward.
Got it, sir. Thank you. And sir, any guidance you would like to give specifically for this platform H2? How much percentage of revenue you are looking out from this particular channel in H2?
I can tell my target is that for not from this, but because this is still in the development phase, at least we should be able to get to daily orders of 500 to 600 per day. That is our target, and take it to 1,000 orders per day. That is our guidance, you can say.
Okay, sir. And sir, my second question, if you can elaborate on the future roadmap in context to the statement that you last time made, that you can go up from 50 to 70, 75 stores through internal accruals, and we have already achieved 86 stores now. So how are we planning to go further? Basically, we are raising 70 crore funds. So how these funds will be utilized between opening of stores, marketing, and technology upgrade? If you can throw some light on how many stores we are looking at the end of FY26 or FY27?
So yes, I think 100 stores will be touching with our internal accruals. That is the guidance I can give you. Now, yes, we gave a statement of that we in the process of raising funds for future expansion, and that is for the growth capital. And if we are able to get those funds in time, Our target is that we should be able to have 100 more stores in FY27. FY27. And so the major expense will be on the capex or the working capital for these stores, and some budget will go in promoting our website or our even our offline marketing also, and rest will be the general corporate purposes. And we are fine-tuning the actual, although we are working with how these funds utilization there. Broadly, we have done that, but you can say 70% will go for the new store expansion, and 77, even 75%, and 25% will be for the, you can say for the, 70% will be for the 60 to 70% will be the capex. Naresh, you remember the exact figure? If you can throw some light. Sorry, I don't know the exact figures.
Yes, more than 50% will be for the capex, and 30% is for the working capital. Remaining is for general corporate purpose and marketing activities.
So this is the breakup.
Okay. And sir,
Sir, you have already asked 2 questions. I would request you to get back in the queue, please.
Okay. I'll come back. Thank you.
Thank you.
Thank you, Mr. Shobha.
We'll take the next question from Mr. Ashwini Agarwal.
Yes, good afternoon.
Good morning, Mr. Agarwal.
Sir, I have just 2 questions. Firstly, can you tell me about the reason behind why are we expanding so much, or why have we expanded so much in Punjab, and what is exactly working in Punjab?
Yeah. I keep on telling this thing because Punjab is an economy that is directly connected to developed economies like US, UK, Canada, or Australia. Now, what is happening in Punjab, that after average 70-80 kilometers, you see high street malls. And they capture to the, let's say, catchment area of roughly 100 kilometers in that vicinity. So, and name any national or international brand, it is there. And what is happening when because most of these are NRI beds, when these people come to our country during the festivity season, whether it's Diwali, New Year, etc., or during winters also, so they have very decent disposable income. They are very and sales are we are able to generate very decent number as far as sales is concerned. And comparatively, the pricings, the rentals are also on the lower side. So this has really helped, and in some cases we are able to get even the revenue sharing deal. So this really helped us in catching these cities, these areas. And interestingly, this concept, although other states are also trying, but it has been proven in more in Punjab vis-a-vis other states also, and the response has been very good. So that is the reason that it's not me, it's for all the brands, because they are getting the opportunity, the relevant target audience, which is relevant high street malls. All the brands are expanding. So I'll request you, whenever you get time, go to YouTube, just search Barnala outlet. You will see what kind of development they have come. It's a one-stop destination for the family entertainment. All the national, international brands. There is a lake. As I mentioned, all the brands, whether it's Zudio, Pantaloon, regional players like Chulmul Jasa, we are there. Metro, any brand, Superdry, Levi's, Puma, Skechers, every brand is there. Plus, you have the F&B option like Starbucks, McD, KFC, or Burger King, etc., and even Nick Bakers, etc. They are there. And so it's in a one-stop entertainment zone for the catchment area of around 80 to 90 kilometers. And lot of and in Punjab also, they being the agricultural belt, and whenever the fasal katti hai, so they have very decent amount in hand, and they have decent purchasing power. So this is and being the NRI belt, they are very well versed about the fashion retail. So that's why the reason is growing over there.
Okay. Also, sir, I had visited a couple of your stores, and my understanding was that our equal focus is on infants also, and also on kids, of 5, 6, 7, 10 years also.
Okay. No.
In the category of kids above 5 years, which is our competition in the organized space?
See, I think I keep on presenting another slide, how this metric is showing. Let me just see if I have that. I'll just show it to you. So, your point is that actually what you are saying in this space, 5 years ago, you see lot of mainline brands who are expanding or extending their product line. To give you an example of Alan Solly Kids, USPA Kids, they are capturing this market space. Yes, and there are players like One Friday, etc. Those who capture in the toddler space, and Mini Club also. They are mainly into the infant, but now they are catching to the toddlers also. So there's no organized players in that segment, or there are certain international brands like Tommy or Gap Kids, etc. So that is the opportunity that we're looking for. There is no one-stop shop for the kids fashion wear from 0 to 40. So that's why we are focusing. In fact, our contribution is around 10%, and more maximum contribution comes from the other category, with the toddler or the young kids. So
is what I wanted to understand, that is there a gap in the 5-year to 14-year segment, because most of the adult brands are shifting in this category. So yes, is there a gap?
Yes, definitely there is a gap. Just to give you an example, I do not have the recent number. I think Alan Solly Junior is around 600 CR plus, and that number is around 1.5 years old. So this Barrington Kids is there. Gap Kids are also occupying. All the big international brands are trying to occupy. Yes, there is a gap, and the industry size also says so. And moreover, kids are becoming mature in the earlier days. So shift is moving from the cartoon merchandise also to the more mature merchandise. So there is a market, and that's why all the bigger players who are operating the mill line are trying to come in this segment also.
Okay, thank you. I'll come back.
Thank you.
Thank you, sir. We'll take the next question from Mr. Harsh Kumar.
Yeah, hi. Am I audible?
Yeah, you are. Good morning.
Yeah, good morning, sir. Just a couple of questions. So, in your investor presentation, you provided same-store sales growth performance. There's a notable drop for your cohort between 12 to 24 stores, 12 to 24 months. Can you just explain that, why the discrepancy in data?
Need to check. Rich, can you throw some light on this?
Sure, sir. Hi, Mr. Kumar. Which one you are talking about?
So in your, where you provided same-store sales growth data or GMV per store data, your cohort from 12 months to 24 months for Q2, there's a decent drop, like from 9 lakhs per store per month to 6.98 lakhs.
Yeah, so it is for the number of stores. Those are maturely, those are having vintage of 18 to 24 months.
Right.
So the stores which are more than 18 months, falling in this category, have a turnover in the first quarter of 25 of around 4.24 lakhs per month, which has grown in the next year by around 50%, 4.24 to 6.25 and 6.98%. So
no,
rate like that. Yes.
No, sir. I'm talking about your build out in 9+ month stores have been much better than 18 to 24 months. Like there's a drop. Like so, your new stores are basically doing much better than the stores you opened a year or a year and a half back. So I'm just trying to understand why that's the case.
This may be due to the region of particular store. In the.
I think Naresh, you can just deep dive into data and just park this question before commenting on this.
Sure.
Harsh, we'll get back to you. You can share your numbers. We'll revert on email, please.
No problem. And second question, so how's been the performance of the experience in your Mumbai stores? I know it's been open only for a couple of months.
Yeah, first month in orbit did 7 lakhs roughly, and second month approximately in the same range, and Vasai is around 10-15 days old store, so approximately 3.5 lakh, I think, in day. So then these are the numbers.
So 7 months in your 7 lakhs in your
7 lakhs
first
per
month.
month in orbit. Yeah.
Okay, okay. And any difference in customer behavior here or any learnings from these stores?
It's too early to comment because I think when the ASM or RSM review meetings will be there, it's too early to say anything. I have visited a couple of times that store also, and the feedback that we are getting is that there's a positive feedback about the store, and no such. They want more range, but the problem is with the in-orbit mall, the store size is smaller. So the display area is limited. So they're looking for a more option, although the options are pretty decent, but still their customer is asking for more options. That is the feedback I have received.
Okay, okay, great. Yeah, I'll get back in the queue. Thanks.
Yeah.
Thank you, sir. We'll take the next question from Mr. Ankit Agarwal.
Hello, am I audible?
Yeah, good morning, Mr. Ankit.
Good morning, sir. So first I wanted to give you a feedback that 15 days back I went to your Rajouri and Muzaffarpur stores and I also purchased some items for my kids. So I really like the variety at the stores and
Thank you, sir.
that was a good experience. So secondly, I wanted to ask you that now the last time when we had the call, you said that when a store is mature, the revenue contribution is about 1 CR per year. So do you think now that revenue guidance per store and for a mature store has increased? And or any feedback on that, any comments on that?
Naresh, you can just mention what is the revenue we're getting for the mature store?
Sure. From the chart we have referred in the earlier question, we can see like a mature store is getting around 10 lakhs per month on an average basis. The vintage which are having 25 to 36 or 36 plus months. You can see from the chart, like on an average per month, we are getting 10 plus lakhs GMV from per store. So it goes more than 1 crore per store on an annual basis.
Okay, and when do you qualify store as a mature store? After 12 months or 24 months? Like when does the store become mature?
I think what Naresh has taken, Naresh, you have taken those stores, those were 2 years old?
2 years old, sir.
But actually, it's a subjective thing. It's a subjective thing, and there are locations which are dense location, decent football. So here the maturity happens earlier also. And where if we go to the new age colonies, where you see development will happen in future, but you are very positive about those things because I keep on mentioning about our Bhopal store or our Mohali store because we have taken the standalone properties even in the Indore store also. Because these are new age colonies, it may take some time for the store to come to the mature. But in some cases, we are getting decent response also. Some stores may take some more time to get mature.
Okay, and sir, one last question was that since you are pivoting towards a more D2C kind of a model instead of like a B2B or something, so what I'm expecting is that the share of retail will go up and share of distribution will go down.
Definitely. Yeah.
So, last time, sir, the contribution from retail side was about 30% on FY25. So, in FY26 and FY27, sir, how much you think this percentage contribution from?
What is our guidance that if we talk of retail, this year we're targeting roughly around 50%. Next year, our target will be around 60% from retail, 60 to 65%.
This year you said 50%, right?
40% we have achieved in H1 and second half is always better. And because you have winter season, festival season and better ASPs. So we are hopeful that retail contribution will touch somewhere around 50%. And we are targeting that. And next year 60 to 65%. That is our understanding.
सर एक कंप्लेंट था लास्ट टाइम भी आपने बोला था साउथ दिल्ली में खोलोगे आपने अभी तक ओपन नहीं किया स्टोर
साउथ दिल्ली में खोलेंगे again you are right we went to this DLF mall in South Delhi and DLF Saket the option that came to us we did not like that option so we dropped it and
सर मालवीय नगर में खोल दो बहुत चलेगा सर मैं Malviya Nagar में खोल दो
Malviya Nagar we are getting that property but somehow I have going back to my prior experience Malviya Nagar becomes a more of a colony market, not a. That's my understanding. We got a property in Malviya Nagar also. Take a point noted. I'll tell my BD team to focus on a property in that region also. So Mall of DLF, we got a property, DLF circuit, but we did not like the location, so we dropped it. So because selection of property is very critical in our business.
So दोनों ही लोकेशन अच्छी हैं सर. मतलब my sincere request to 1 second. My sincere request
It's
to
okay,
you.
so please go ahead.
My sincere request to you, sir, please consider, because I think it will add a lot of value to your visibility in the
Sure.
Bangalore.
Just to update you, although Saitaba Link Road or Shine Bagh doesn't come under, it's a part of, you can say, South Delhi. Shine Bagh was our first store. Now we are increasing the size of that store. We are making it a 2-story store, taking the existing building. So you'll see a bigger store in that region. And it's a main link road between South Delhi and Noida. So a lot of traffic on the road will help us in the marketing leverage to our bigger facade also.
Okay, so thank you.
Thank you.
Thank you, sir. We'll take the next question from Mr. Ashish Soni.
Sir, you want to scale stores from 100 to 200 by next year. So what is your internal preparation and the challenges you are seeing to scale? And location-wise, have you finalized the location criteria?
As I keep on earlier also, if you see our growth rate, in 23 we were having 11 stores, 24 we were having 14 stores, 25 we closed with 43 stores. Now the growth was slow because we wanted to test our business models. We were not very aggressive. Once we thought that the things are aligned, now we know we have cracked the model, we know the SOP, we know the processes. So we scaled it to 43 stores with the support from the IPO funds, and currently we operate 86 stores. Talking about the team member, we have all the relevant team. We have a very strong BD team, retail ops team, retail planning team, and people are well versed, and we are expanding also. And I think as we speak, we have 32. We have already 32 LOIs we have already signed, and 20 around 15 to 20 are in the project stage. So 32 LOIs, and for every week or every 10 days we are signing more LOIs. So team is very aggressive. We have the regional team also, and we have a centralized BD team also who connect with the different markets, and you'll see more stores in Pune, Bangalore, Hyderabad coming up, and we have signed LOIs in the project stage in this. So we have done all the back-end work. Now we have to replicate our business model, and we are focusing on that also.
You mentioned the footwear segment. Do you see a gap in the industry? So how much you want to get into, like, revenue-wise footwear segment, and does it help in your margin improvement or something of that sort going forward?
Margin are more or less same if we talk of apparel or footwear. But yes, the advantage of footwear is that if we are given, let's say, 8 feet for footwear in our retail space, so we need not expand that space, because the only thing that we require is the backroom stock. And if we're able to get a better per square feet sale by giving better options to our customers, and we can increase that thing also. And that is the feedback that we have been getting from customers and even the industry people also. There is no organized player in this category also, and since we are focusing on the premium fashion, I cannot comment at this stage that will it help in increasing our margin or not. But yes, it can definitely help increasing our per square feet sale from that area only. And competition is less, and some of the categories like ballerina, sports shoe, not much place are there. And thanks to government policies, because after implementing BIS, dependency is becoming more on the organized channels of factories located in India. Earlier, there used to be the unorganized sellers who used to import goods from China, and that is not happening. So shift is happening from unorganized to organized. That will definitely help us in increasing our contribution of the footwear as a category.
So just one suggestion based on whatever variety I've seen in our site. Can you make some Indianized version? Because I think whatever products I see, because I buy for my kids, it's more looking foreign-based product rather than some Indianized versions also. So that makes, if you can change, that will also help because
You are asking about the models or
yeah.
size?
The apparel quality of whatever designs I am seeing, it's more because I have been abroad also, so I have seen it's more westernized rather than Indianized. So if you can make a mix of Indianized also, that will also help gather.
Sir, if you're talking about ethnic as a category, we are not focusing on that.
Not ethnic, I'm saying in
Yes.
general some Indianized version of the clothes rather than just only westernized, because that's my observation.
Okay, point taken. I'll fight.
Thanks and all the best for the future.
Thank you.
Thank you, sir. We'll take the next question from Mr. Dheeraj Kaswan.
Good afternoon, JD sir. This is Dheeraj from RRR Investments. So I think it's my third or fourth Concall for this company. So again, many congratulations for the result. And
Thank you,
it was a very transformative result that you have posted, because in H1 we saw that there was a good growth in H1. There was a change in the mix where we are getting our revenue from. After 2 or 3 years, this is the first time that we have posted positive cash flows also. So there has been a lot of changes in this result. We can't just focus on the revenue that has come, but a lot of different changes have happened in the back end. So my question was about that, like we are doing 40% in EBO this year, we did 26% last year. And even in key accounts, there has been a lot of growth. So I just wanted to know how are you projecting your H2? We are not just focusing on growth right now, right? We are focused that our revenue comes from sources where our working capital days is also less, and we are not having any constraints there because.
Sure. Got your point. See, we are fully aware of what is the question that we are aware. Yes, working capital. Again, it has to be a strategic call that we want to focus on these channels also where the working capital is in the higher side. So my answer to this is as and when our contribution of the controlled business will increase, we can slowly reduce our reliance on other channels. So again, we'll be focusing only on those partners who are very disciplined and they're able to generate decent sell-through, and they're making payments on time, not delaying the thing. So we'll separate men from boys, and once our dependency is more on our retail channel. So we as a management, we are fully aware of these things, that working capital is deployed more in these offline indirect channels, and we are taking necessary corrective action, and hopefully you'll see the outcome when we declare our results in the next for the H2. So but yes, there has been a debate that keeps on going between our strategic team and that's what I've seen for all the larger brands of the international. They do not ignore any channel. They operate in all the channels, whether it's offline or their own EBOs or the e-commerce also, because the philosophy is that even these indirect channels, distribution, they also have their own customers, and one fine day you can migrate those customers to become your direct customer. So, but yes, investments are more in working capital is more in this channel. We are cautiously taking these decisions, and you'll see correction happening further when we declare our H2 results.
Sir, yes, we are not expecting that our sales from EBO or our D2C channel, like combined it is 45%. We are not expecting that this percentage will go lower, right?
No. As I mentioned earlier also, for this year, we are expecting it will be around 50%. Our retail sales and additional contribution from our e-commerce, and going forward this 50% should touch somewhere around 60%, because new stores are opening, earlier stores are getting matured, so this contribution will increase because retail takes certain time, and as and when the store is becoming older and older, we are getting better per square feet numbers from individual stores.
Okay. And I said, like looking at our working capital, like our receivable days, when I first started following your company, it was showing around 210 days of receivables was what you were working with. But
See,
since then there has been improvement to 180, to 150, to 120. So we don't want to lower our receivables to zero, I understand, and we can work comfortably with like 90 to 120 days. So, and that can be used for other channels, right? Like our EBO and online is 0 days.
Sure.
So
I would like to add one more point, Dheeraj, because March and September are those periods where there is season launch. So ironically, we have to report these numbers also. So that's why the receivables are also shown on the higher side. But if you do the monthly review of this, so cyclically, being a season, it reduces, then it increases at the time of season launch. But yes, point taken. We are, as a management, we are fully aware and we are taking necessary corrective actions also in this aspect.
Okay, sir. Perfect. Thank you so much for answering the questions, and
Thank you,
all the
Thank
best.
you. Thank you. Thank you.
Thank you, sir. We'll take the next question from Mr. Pawan R.
Hello. Am I audible, sir?
Yeah. Good noon. You're audible.
Sir, can I know, is it possible to touch 500 to 600 stores by FY 2030?
See, everything is possible. I cannot say it's not possible. Obviously, we have to see the visibility of the growth capital. Because the SOPs are in our retail model, once the SOPs are aligned, because the beauty of the retail is that you know your display area, how many SKUs you require, whether you are making 1,000 pieces per SKU or 5,000 pieces per SKU, it helps you getting a better margin. And you need a strong operational teams to manage that kind of level. It is possible. I'm not saying it is not possible. We have seen a lot of brands doing it there also. Yes, we need to get the visibility for the. If we get the growth capital, then definitely we can achieve those kind of numbers. That's one easier one. That's no, because, and just to give you an example, I would not like to name the other larger player who is operating, although they are operating in the value segment. They're having around 1,800 stores as on date. So we'll be touching around 100. So the gap is very big. So and the market is also expecting per capita consumption in our country vis-a-vis the developed economies, or maybe if we talk of the economies of Middle East, etc. It's very less in the kids as a country. So this is so there is an opportunity, and there's an I do not see that it may not happen, and it is possible, but we as a management we have to see the visibility for the growth capital.
Okay, sir. Thank you, sir.
Thank you.
Thank you, sir. We'll take the next question from Mr. Shubhanu.
Hello, sir. Hope I am audible.
Yeah. Good. You're audible.
Hello, sir. Sorry, sir. I'm very new in this company. Can you tell me the apparel segment ASP and footwear segment ASP?
See, again, the product categories are very wide. You're talking of, if I start with footwear, there are open footwear, flip-flop, clogs, and sandals. Then there are closed footwear, ballerina, sports shoes, or casual shoes. The ASPs differ channel-wise also. If I talk of retail in particular, normally flip-flops or clogs are there in the range of 500 to 1,000. Sandals around 1,200 to 1,500, and ballerinas around from 1,800 to 3,000 or 3,500 ballerinas and sports shoes. So this is the broad ASP. On an average, we talk because the ASP changes based on the season. Summer, because open footwear will sell more, and the closed footwear will sell more in during the festivity or in the winter season. Similarly, in the apparels also. You see a lot of categories, knitted, woven, winter wear, party wear, denim, etc. Again, a t-shirt will start from $7.99, may go up to $12.99. This shirts will be around $1,500 to $2,000. Sweatshirt will be around $2,000 to $2,500. Denim goes from $2,000 to even 5,000 also. Some fashion denim we are making in the premium fashion segment. Jackets again 3,500, 4,000 plus, and so this is how the number. On an average, you can say the ASP is what we have calculated comes around somewhere around 900 to 1,000. If we talk of the financial number, that is the ASP that we are able to generate.
Okay, sir. Sir, as we move to FY27, our target around 100 store for FY27, but for opening for 100 store, our margin will be affected, more depreciation, more other expense. What will be our margin guidance for FY27?
See, what is it? Because if we open 100 new stores, first of all, it will not come at one point of time. Let's say it's 7-8 stores on a monthly basis. That will be the flow. That's what we are seeing. So it will not, and moreover, the 100 stores that will see the next full year, those also will be maturing. So I do not understand much of dependent, but yes, I keep on again saying that we may be hiring certain senior people also to have a better operational efficiency, maybe some employment cost, and so I would like to mention this also. We have got a ESOP approval for our team also from the exchange, and we'll be rolling out the ESOP activity also with our key team members also. So that cost may in the short term will impact 50 basis or 0.25 basis or 25 basis in the margin, but in the long term it will be beneficial. What I've seen in retail, once we have a new customer, repeat customers, ASPs are, you can command the ASPs and you can improve the ASPs. Then all these are part of the retail operations, and you can, and with increase in volume, you can also have a better pricing strategy with your vendors also. So not much difference what we are foreseeing in the near future.
Okay, sir. As we see our, if we see our repeat customer only 26%, but some of the value retailers like DMart, others like Bajaj Style, their repeat customer rate around 50% plus, and some of players have around 70%, but our repeat customer rate around 26%. What is the reason for that?
See, in what I have seen in premium fashion retail, this is a decent number because if we talk of V-Mart or Vishal, they have other channels of they are selling FMCG and other products also. So they are the buying pattern. Sorry,
I'm talking like D2 Bajaj Style. They are not other category like mainly.
Fine, got it. There is a question. So I misunderstood your question. See, in the premium fashion, because I have been associated with the premium brands also earlier, this is a trend that we have seen in the premium fashion as retail. Moreover, what is happening in kids, it's not that the parent will buy one piece or two pieces. The buying happen in at least 4 to 5 pieces or 6 pieces. So and then they come after 4 to 5 months, and then they buy a fresher. So this is as per the industry standard. I have not checked about the value retail what you mentioned, but in the premium fashion as a segment, this is a trend that is prevailing in the industry. I can just check back on this and get back to you, or I can make note of it. So if that is the case, I just understand it. But for premium fashion, this is the standard.
That's from my side. Thank you, sir.
Thank you.
Thank you, sir. We'll take the next question from Mr. Prakash Arora.
Good afternoon, Mr. Arora.
Hi, am I audible?
Yeah, you are audible.
Sir, very good result. First is on the GMV that you have reported. Can you tell the difference between GMV and revenue for a store?
I think the only difference will be, I think, the GST.
Amount. Yes, sir. Only the GST amount is the difference between revenue and GMV. If you reduce the GST amount from GMV, it will come to the revenue.
Which will be 10%?
Not 10, maybe 7 to 8.
More of our products are under 5% of category if the ASP is less than 2,500. So on an average, you can take it 7.5% for the current scenario.
Noted. Any reason why revenue up 99% but PAT only 53%? Are we losing margin in any channel?
No, I think, Mr. Rola, I just explained this thing also because as we are expanding, we are increasing our team also. We are increasing our marketing spend also. I would request you to all, please go to YouTube channel. We keep on introducing certain ad films also. Just have a look. So team size is increasing and expansion is also happening. And new store at least take 3 to 6 months at least to come to at the break-even level. So it is because of that. This is a short term. In the longer term, this will be aligned with our the guidance that we keep on giving.
Any guidance on full year revenue and PAT?
I really don't know whether I can give this forward-looking statement. Let me discuss with the internally. If it is possible, then we'll share it with you separately because I'm not sure. But yes, what I can say that you can expect a decent growth vis-a-vis the earlier numbers.
Thank you.
Thank you, sir. We'll take the next question from Mr. Nimish Kala.
Good afternoon, sir, for this excellent set of numbers.
Thank you, sir.
Sir, I want to ask what is your dead stock percentage and how do you minimize it?
ठीक है सर, नॉर्मली कोविड के बाद से तो अभी तक तो कुछ ऐसा मेजर नहीं है, बट हाउ वी प्लान इट, आई कैन जस्ट थ्रो सम लाइट ऑन दैट. The entire inventory is divided into 3 parts, primary 3 parts: core, essential, fashion, or seasonal. So core essential are those articles who sell across the year around 10 months in a year. So these are, you can say, t-shirts or denim, basic denim or normal shirts, etc. So these are available for 10 to 12 months in a store. So and we keep on repeating the cut size also. Those are this is how this is managed. Now coming to the seasonal or fashion element. So these are those articles that we have to focus on, and we have season because being the winter season, particularly in north and east, we have to introduce this category also. To have a better control, there are review meetings happening to understand the sell-throughs and what all subcategories are selling or what all subcategories are not selling, both in the season and the fashion as a category. And then comes the role of retail option listing or the visual merchandise aspect that gives certain incentive to the sales team to push particular category which is not selling, or maybe certain schemes to sell those products if the sell-throughs are less, or moving the product from one store to another, aligning things so that you can say that stock can be minimal. These are the certain operational things that we keep on doing on periodic basis. Plus, since the volume is growing, let's say for one article we want to produce 200 pieces, so we divide into 2 parts. First, let's take the first lot of 1,000 pieces. And if it is performing, then we can ask the vendor to go ahead with the additional 1,000 pieces, or the designing or the sourcing team can use that fabric for some other product or some other development. So these are the from the sourcing type we are taking the corrective action. And having said that, there is always, but in our business there is always a risk of a sell-through. So for every 5 fresh stores, we plan 1 factory outlet also, so that any leftover is there, it can be moved to the factory outlet, and with additional discount, it is liquidated from the factory outlet also. And currently, since the stores are expanding and inventory is always less, so currently we are not facing these challenges. And in future also, we are in discussion with certain merchandise planning softwares available in the market to have a better planning and insight of how to minimize or reduce this leftover inventories also. So these kind of actions we are currently working.
Thank you, sir. We'll take the next question from Mr. Chirag.
Good afternoon, Mr. Chirag.
Yeah, am I audible, sir?
Yeah, you are audible. Please go ahead.
Yeah. So, sir, my first question was, once we reach the targeted stores of 100 or maybe 150 stores, then would you go on an expansion plan with a FOCO model, that is franchise-owned company operated?
Currently also, we have tested around 6-7 stores in the FOCO model also. Yes, we have now, I think we are open for that also because it gives better understanding of, it helps in better scalability of our business model also. We have done around 5-6 stores and 6-7 stores other. And yes, we'll try to explore this option also, whether it's FOCO or FOFO, both options. And we'll be exploring that, and maybe we'll be able to scale at a faster pace if we're able to add serious partners with us.
Okay. Thank you, sir. And my second question is, so last year the split of H1, H2 was 30-70. Can we assume the same this year, or will it change to some other number?
Approximately 35-65 you can take.
Okay, 35-60. And any growth guidance for FY27? How much will you grow in FY27 in percentage terms, if you could help?
This, if we are able to, because we're in the process of discussion with various advisors about the fundraising for the growth capital.
Got it.
If we're able to align that in timely manner, I do not think that opening 100 plus more stores will not be a problem.
But any guidance in terms of percentage, if you can share that, or not possible at this stage?
Again, I'll qualify my statement. I really don't know whether I can give this kind of forward-looking statement.
And last question from my side. When is the fundraise expected to close? Any timeline?
We are in discussion, and normally it takes 3 to 5 months. That is the process normally, because we have to take the approval from the exchange or the shareholders, depending on the route we take. So you can take 3 to 5 months, then guidelines you can take.
Awesome.
Okay. Thank you, sir. We'll take the next question from Mr. Khalid Khan.
Thank you for the call, sir. Can you hear me?
Yeah, we can hear you. Good afternoon.
Sir, I wanted to just give a feedback on your online website, where first thing is that your display is just like a clothes. I think if you put on a model, like a child model or something, then it looks more appealing, and it gives more context that how it will be, when a person wears, how it will look. The other thing is that in each category you just have only 6-7 options. I think that is very low. We need to increase it to minimum 15 to 20 options per category. So that's the first feedback.
Okay. Yeah, please go ahead.
The second point I wanted to know, sir, I have seen that in last few months we have participated in Saudi Riyadh. So any update on that? Are we planning to expand our business in Gulf and Saudi region as well? We are getting certain inquiries, and let us see how the things will shape up. We are getting certain inquiries, but I do not think that it will happen in the short term. Maybe something will mature in the next financial year. No, it's not going to happen in the short term. But yes, we are getting certain queries, and response have been pretty decent over there. And so it is again a strategy call that we need to take internally, that we want to focus more on domestic, or maybe we can open that channel also. But yes, that option we got, so that we can just feel the waters of that particular tactic. That's what we have done. And again, maybe it's a strategic reason that is pending at our end, that whether we want to go immediately for these kind of, we want to wait for at least 50 more stores to operate in the domestic market, so that we can start expanding overseas also.
So it's again the reason is pending. Coming back to your earlier question of child model, I think we have done a photo shoot because doing the photo shoot with kids as a category is very painful because we have to abide by certain guidelines also, and kids are moody, so sometimes it becomes very difficult. So overall, you see the banners, etc., that the latest shoot that we are doing that will be updated. But for kids, using kids model for displaying each and every product, it's a great idea, but facing a lot of challenges also because what we are seeing, even this matured website, Mantra, etc., they have also stopped doing with the kids model, and they are also doing the plain photo shoot of the product. But point taken, at least we can have a mix of models and a flat photo shoot, and that obviously good thing. I'm answering your sub question of this thing only. Subcategories are there. We are building the inventory, as I mentioned, never auto stock inventories for our e-commerce business, and you'll see more options in future. And there's a detailed merchandise plan happening for the e-commerce, and since the website is currently in the pilot stage, so doing that other testing and other aspects also that we are doing before going full fledged. So you'll see more options also in future.
Okay, sir. Sir, for the Saudi and Gulf, so no contribution we should expect in FY 2026. And how about FY 2027? Do we expect any kind of a contribution from the overseas as well?
We are working on that because it's in a very initial stage, so very difficult to comment at this. Maybe 2-3 months down the line, we'll be able to throw some more light on that.
Okay, sir. Sir, I have one other question, sir.
I would request you to get back in the queue, please. We have restricted 2 questions per attendee.
No problem. I'll let him continue. It's okay. Khalid, you can continue.
Sir, just last question, sir. I wanted to know, sir, as we mentioned in our presentation that our retail contribution is going up, so this should ideally improve our margins and also the cash flow as well. So if our cash flow is increasing, then for the future growth, after 2 years down the line, then we should not be requiring extra funds for growth, right? Is that assumption correct?
What you're saying, what is the understanding that we have done? Maybe we may require after this fund run, we may or may not. I'm not sure because again the future will tell. We may require a smaller round, let's say after 18 months or 20 months, after we are able to raise this kind of. But after that, I do not think that the cash flow will be sufficient enough to fuel the further growth of the business.
So is the assumption correct, sir, that if the retail business go up, then our margin will improve, sir, and cash flow as well will improve as compared to the distribution model?
Margins in the short term, because we'll be spending some amount in the hiring new employees, the senior level employees, some more effort in marketing. So margin and may reduce in the short term, but although we'll be getting the benefit by increasing our scale with the vendor, but yes, long term it will be benefit. I can say that.
Thank you, sir. That's all from my side. Thank you.
Thank you, sir. We'll take the next question from Mr. Satish Patnaik.
Good afternoon, sir. I'm audible.
Yeah, you're audible. Please go ahead.
Sir, regarding this website, whatever I have seen now, it looks good. So this is website, right, sir? It is not an app as of now.
See, earlier we had this is a mobile friendly version. So if you are, it is a more mobile friendly version vis-a-vis the website version. Now earlier when we were using the technology for Magento, we developed app in the Android as well as iPhone also. But I don't know. That is the feedback that we keep on getting that nowadays instead of having your promoting your app, it's better to have a mobile friendly version. So currently we are focusing on that. So it's more user friendly if we access it through your mobile, this website.
So the follow-up question on this thing was, so how are we promoting this website, sir? Okay.
So, team is doing certain SEOs, and they have hired currently the agency that who have developed this website. So, they are helping us in doing the SEO part. Then we are promoting, we are doing certain ads through Google Ads and Facebook and through other channels like social media also, and cross-selling through our retail. Because we are integrating our CRM also with retail and with the website also. Then we'll be doing cross-selling, we'll be promoting cross-selling also. Maybe getting certain gift vouchers to all our offline customers to undertaking to do a shopping from our website. So that's how we are going to acquire new customers.
Any plans to add any celebrity face to this website?
In the discussion stage, and I keep on getting mixed review on that. Maybe yes, maybe not. Some people say that it will be good for the brand, but some people are not inclined. Maybe when we are able to do the next fundraise, we can allocate certain budget for celebrity face also.
Understand, that comes with a cost. Yeah. So this 500 you have said, sir, 500 to 1,000 orders that you are targeting. So how did you arrive to this number, sir? Because I personally feel if the website is good and given it time, over the years this number can go really very high.
I understand. So I'm being very conservative. I am aware of what you're saying. I'm very conservative because let us build the foundation strongly, because currently we're in the pilot stage. So we have to address the customer queries also, their issues also, whether return or for any question, etc. So we are currently testing that. Once these APIs or add-on softwares are properly working, we need to do, you can say, prudent marketing to increase the orders really. So I'm very conservative, like to be very honest.
Okay. Thank you so much, sir. All the very best. Good day.
Thank you. Good day.
Thank you, sir. We'll take the next question from Mr. Abhi Chaudhary.
Hi, JP sir. How are you going?
How are you?
I'm good. Sir, you touched on the quality of the product, gentle on the skin. Can you, I think, expand a little bit on that?
See, I'm not a product guy, so I cannot mention on that. I think they do certain fabric testing as a part of their SOP, and there are certain quality parameters, and based on that, I think these things are defined. So I'm not fully aware. If you want a detailed understanding, I can connect with the merchandiser. They can help you in understanding in more detail.
Sure. So when we, I think, talk about premium products, I think what we have seen is a lot of shift on the organic cotton, 100% cotton, those kind of lines. Do you have something in the pipeline which would cater to that?
I think team is working on that.
Okay. And my next question is, in terms of the sales staff incentives, do you guys have anything for the store staff? You touched upon the ESOP for the senior people. How do you, I guess, yeah.
So for the store level staff, there are monthly incentives. How they are defined, sometimes the wow bills, or we give a specific target to sell particular category, then and the monthly target. So incentives are part and parcel of the retail ops, and it is very critical for a store performance. So it is always there, and we keep on promoting also performance also. We have done that in the past also. The store manager, we have made them ASM, we have made them RSM. So that is a career path we are showing. And maybe some people, and obviously ESOPs, normally there is the apprehension that it is for the senior members also. But yes, we have identified our, you can say, long-term associates persons also who are associated with this company, let's say for the last 7, 8 or 10 years also, will be rewarding them also through ESOPs.
Yeah, thank you. And in terms of, I think the previous participants' comment regarding, I think the kids' photos, there is some new technology available in terms of the AI which can probably do some portions of that. So that would be good to,
Yeah,
I guess.
we are working on that, but yes, we are exploring that order. We tested that thing, but say there is a trademark between creativity and logical, or creativity and scientific as well. So those were not looking very nice when we use AI and develop certain images. Maybe in future, obviously, your point noted. We are exploring these options also. It's not like that team is working on generating the images through even AI also.
Perfect. Perfect. Just quickly, a last question on the, I think same store sales. I think somebody asked before in terms of, do you think you have reached a cap, I guess, the 1 crore or whatever, 1.2 CR which you're currently doing, or there is a lot more potential still?
I'll just, because retail is such a phenomenon that once you have a decent repeat customer, 1 crore can become 2 crore also, 3 crore also. But obviously, per square feet sale can go to that. If we're doing let's say around 900 or 800 rupees per square feet, it can go up to 1400 or 1500 also. That is possible. Going by my prior experience, I remember what is when I opened first Puma EBO in Delhi in my portfolio. First year the sale was 1 CR, and when the store became mature, it became 6 CR on annualized basis. So that is the kind of potential that retail have. But yes, it has to be scientifically connected with the store area also, the display area also. 900 can easily become 1400, 1500. That is practical. Or even 1600 also. And this is possible. So 1 crore can go up to 1.5 or 1.75. This is practical and possible.
Perfect. Perfect. Thank you. Good luck for the future.
Thank you. Thank you.
Thank you, sir. We'll take the next question from Ms. Bhavika Singh. Am I audible?
Yeah, you're audible. But...
Okay. So I just want to know, like, what guidance you have for H2 of this year in terms of sales and the margin.
As I mentioned earlier, that normally second half is almost 60 to 65% for the first half, and I think we're in the right direction. And margin also more or less will remain in the same bracket that we have observed in the H1. So maybe that is the guidance briefly I can give it to you.
Also, I've been tracking your company since a long time, and I see that you are doing a ramp up very quickly. Like, I think in last call you mentioned that by December you will be able to reach at 100 stores, and you are almost there to, like, I think you will be able to achieve it. So I just want to understand from industry point of view, why such a quick expansion you are doing it, like, because I know that you follow the cluster approach and that's helping you a lot. But is it like there is a market trend shift which happens in the industry, because you are the only listed kidswear player right now, and in North you
first is also there.
Yes. So in North you have a good presence. So, and even your focus is more on the retail side. But what I have seen that people are more switching to the online segment, like on the website side and all. So what's your vision behind this retail expansion? Because like, what do you see in?
We'll be touching, as you said, we'll be touching around 100 stores, and the other listed player is having around 1800 stores. So gap is very big. So market size is there, and they're also expanding, and we are comparatively very less markets vis-a-vis the options available across India. All the mature markets, they are having around 500 to 1,000 stores. So the market size is there, and so that's why we are expanding. Now, earlier we tested the model. We were very slow. In 23, we were having 11 stores, then we 50 to 14 stores, and then we expanded to 43 stores. So we were testing our business model, and for the last initial year, once we were comfortable, we were confident, and that's how we started our expansion. Now, you have also rightly said that online market is also expanding. I'm a strong believer of omnichannel presence, whether it's through offline or online, because lead generation can happen at any channel. Particularly in kids, if we talk of, you may be having the lead generation can happen while visiting the physical store during the weekend, but the conversion may happen through your website, or it can happen vice versa also. In kids, obviously, there are size issues are there, so the returns are little on the higher side. So the parents normally have seen prefer to have a look and feel and try the purse on kids before taking them and buying this. So both the channels are important, and we will be focusing on whether it's retail or D2C. We'll be focusing on that. Having said that, in future we would like to use our retail store as our distribution point also for our e-commerce business, so that we can have a better customer connect or better customer experience by having the same day delivery or and by gaining the trust of our customer. And brands who started from the online space, if I talk of brands like Demons, many other brands who started from the even Mokobara, the luggage brand, Snitch, they started from the online space. Now they are acquiring the offline space. So again, they are proving my point that omnichannel is the right strategy for directly connecting with the customer, whether it's through the B2C or own retail or D2C. So I think all other industry experts are aligned with this retail and e-commerce strategy, and we are also following that process only.
Sir, just a question regarding your previous call. You mentioned that you are going to test the luggage segment also, like for kids, premium luggage side, and the other products you are going to add.
So purse are, we are expecting the purse. It has not been delivered so far, and once it will be, we are in the product development stage currently, and once done, we'll be testing this in our retail stores.
Okay, sir. Okay. Thank you so much, sir.
Thank you. Thank you.
Thank you. We'll take the next question from Mr. Meenal Singh.
Can you hear me?
Yeah, we can hear you, Mr. Meenal.
I wanted a few numbers from you. What's the average transaction size for your online channel?
Again, if I talk of the D2C, as I mentioned, recently we have migrated to our new website in the pilot state. What is the average size we're getting? Around 900 rupees, the ASP we are getting. And so there are multiple orders, obviously you can, and the UPT or unit per transaction, what we have observed is around 1.75 roughly. We will get.
And what are the return transaction size?
Again, it's hardly 1 month for our D2C, so very difficult to comment. Maybe we'll show. And for the marketplace, it's around 30%. You can see the return percentage.
Are you also considering going towards quick commerce channels?
We are putting our inventory at various warehouses of Mantra, etc., and they are doing the same day delivery. So indirectly we are involved there. As I mentioned just now, that we may be using our store as a last mile channel, and as and when we are having a decent numbers of orders from our e-commerce channel, so we can use those stores as our channel. Quick commerce, the only thing, we are currently exploring the thing, because for that we need to have a commoditized styles. We cannot put everything about it, just because managing inventory is very crucial in our fashion business. So whatever style we will be able to commoditize, for example, if and keep on mentioning in that Macon and NOS product category, that obviously we can keep with our marketplaces, and that and they're giving the same day delivery, if not the 2 hours delivery. So we are already working on the same day delivery with the channels like Mantra, etc.
It's just that a number of other new players who are entering, not in your segment, but in the apparel segment elsewhere, not the kids, they are considering Q-commerce because a lot of consumption shift is happening from, likes of Myntra to quick commerce.
See, again, I'll say that if we require a basic product, let's say a socks or a t-shirt, basic t-shirt, or maybe a white shirt, I know these markets are expanding, and so we have not taken a decision on that. But yes, same day delivery we are working on. I'm noting your point. We'll discuss in detail with our internal team, and then we'll take a call on that also.
Sure, thanks. You mentioned that you're talking about inventory optimization and the rest. So I just wanted to get a understanding, some broad-based views. What are the kind of tech and operational investments that you're doing now that you're expanding so quickly, and the number of SKU is also growing, and everything, geographical footprint is growing? What are the kind of investments that you have that you are thinking about, maybe not immediately, but over the long term, to manage all of this complexity?
See, first of all, we are in the process of introducing, although we are using a domestic grown ERP for all of our operations, they do have a decent dashboard, and it's connected. We have the live real-time information. But yes, the technologies are upgrading day by day, and we are exploring certain softwares like who are specialized in the merchandise planning or the future predictive planning, and we are in discussion with a couple of software. And once we finalize, we'll be implementing these kind of software. Currently, we are not planning to shift our ERP, but yes, once we achieve a certain decent top line, then we may decide to migrate to SAP or some similar platform, because it's what I've seen that all the major brands are using these platforms. So from procurement, from merchandise planning, that is going to be the next focus area. Although we have the in-house planning and merchandising team who focuses on that, and they currently use certain data analytics tools and the BI tools, and we want to just strengthen this function by introducing these merchandise planning software.
One final question. What's the current sales per square feet?
For the mature store, it's approximately 900 per square feet, 900 rupees per square feet that you can.
And the square feet is super area or carpet area?
Naresh, can you just help me understand? It's so you're talking on super or carpet?
So it is on super area.
Super area.
And what sort of year-on-year, do you have any growth guidelines on that?
See, for mature store, we can easily see a growth of around 16 to 18%. That I don't think that is, maybe up to 20% also, Y-on-Y basis for the stores that are coming to the that are becoming mature. And again, because it's a very subjective thing, some stores that we open in some market, and they are maturing right from the day one. So, and some stores take around 3 to 6 months to get mature. So it's a very subjective thing, because just to give you an example, we opened a store in Shatna, Bhopal, and did very well doing very well right from the day one. We opened a store in Lulu Mall and performing pretty decently, and although it has been hardly 10-12 days. So sometimes we're also surprised at what is the kind of response that we are getting. And in some new age colonies, yes, we opened a store in Airport Road, Mohali. We were fully appeal because the traffic is very high on that road. It will take at least 4 to 6 months because a lot of high-rise developments are happening in them that slow to mature. So, and the number that we are getting is aligned with our the strategy that we have decided for these stores.
Thank you, sir.
Thank you.
Thank you so much, sir. I thank all the attendees for a very engaging session. I now invite JD sir for his closing remarks.
I didn't thought of that. I'm happy to give a closing remark also. Thanks everyone. Thanks for your participation, your patience. Hope I have solved all your queries, your questions, and we were getting a lot of feedback to have this call, but because of certain prior engagements, I was not able to attend you all. My apologies for this delayed meeting. And what I can say, just to conclude this session, that with increasing disposable income, nuclear families, more spending on kids, brand aspiration, Indian kids fashion industry is entering into a very exciting phase of growth, and we are very well poised as a company, as a brand, to take this leap. Future is very bright, very positive, and the kind of feedback that we are getting from industry, our peer groups, investors like you who invested in our company and have been very patient so far, and you can trust on us, and we are very well poised to take our business to the next level. Thanks for your patience and time. Thank you very much.
Thank you so much, sir. On behalf of Purple United Sales Limited, I thank you all for being part of today's call. For any unanswered queries, kindly email us and we'll get back to you promptly. Thank you. You may now disconnect.
Thank you very much. Thank you, everyone. Bye-bye. Take care.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.